Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great trading day on Friday and had an even better weekend. For those of you new to the channel, do me a favor, click that subscribe button down below so that you get the alerts as they happen on a regular basis. Let's go ahead and dive right in, starting with the S&P. So we're down a little bit in the overnight hours. We gapped down on news that today we start the tariffs with China, the tariffs on $200 billion worth of goods. You know, when I sit back and look at it in a world of trillion-dollar companies, how much is a 10% tax on $200 billion worth of goods, right? So just something to consider, that it's not a humongous amount from when you think about the grand scope of things. But we do have an area down here where I talked about a potential for a reversal last week. Now, in the live trading room last night, we looked at a bunch of different trades, but one of the things that we talked about was that this now, because I'm chopping sideways before this area, I basically now have a 1-to-1 reward to risk ratio, right? And when I say that 1-to-1 reward to risk ratio, it's because if I get into this thing and I use this as my risk, if I get out at the opposing fair price value area, that's my reward. So it's a little bit greater than 1-to-1, but not much. So I'm still saying I'm willing to take it, but I'd like to see how we arrive into the level. How do we come into the area? And we'd have to come down in there fairly hard. Now, my issue with it is that we may not move down to that region today or tomorrow. We could actually just kind of chop between that area and the high between the next couple of days, simply because we're waiting on the FOMC meeting minutes and what's going to happen with the Fed on the 26th. If there's a reason that says we're going to speed up interest rates, I think we could see the market then move. But in the meantime, I'm just going to kind of stand pat with my area down here. Now, I talked about last week, we talked about there's a level that corresponds to this in the Nasdaq. And the Nasdaq has come into that level, but it's not really going anywhere. Now, if you remember on Friday, we said, listen, with both of these levels, I'm not going to take the Nasdaq reversal. We showed it to kind of show that it's there, but we're not looking at the Nasdaq for a reversal trade. The Nasdaq's actually the better opportunity for breakouts, since we've had the Nasdaq overall be weaker than the S&P. So I've really got nothing to add in either one of these markets today, because I'm holding off. I'm going to leave the S&P as it is. Now, there may be some other opportunities down below this if we do break through. I think that we could get a little opportunity right here. Matter of fact, I'll put that one in. Little area right there. Right now, I'm not a huge fan of that. It's formed it at right around the Australian market open, so it's not as our high probability kind of a turnaround point, but still has a good shape. It's a little bit of a basing before a pivot low. So if we break below there, then I would say that this would be our next strongest, best turnaround point. Crude oil. So in crude oil, we had a potential for a breakout. We had this little triangle pattern that was forming, and we looked at this last night in the live trading room, and we did wind up breaking out to the upside. So I'm not sure if anybody caught that. If you did, leave it in the chat box down below. Hopefully you were able to catch that little bit of a breakout that we had. So now I'm going to remove those lines off of this area. Now there's still a chance for a reversal back to this area. Mind you, we're on a 15-minute chart, so we've got lower probabilities on the 15-minute chart, but there's still a chance for a reversal back into this area. So I'm going to switch this to a purple line, because remember, purple lines are always lower probability because we're going to a smaller time frame to find the level. So anytime you find the level on a smaller time frame, you take a bit more risk. But this, the big pop out of that area occurred right around the Australian market open, and so we've got a nice little run from that area. If you've taken that ride and taken the run, I would move your stop up to below this pivot low. to lock in some of your profits. Next, on the gold markets. So in gold, we've got a little bit of a reversal point up above us, where we may see a little bit of an opportunity. That also was found on the 15-minute chart. So you can see there's that little area in here. We'll see if price does indeed return back to this region. Next, when we take a look at our bond markets and our currencies. So in the bonds, we are sitting above our potential breakdown to the short side. I don't know if we're going to get below there before the FOMC announcement. Remember on these levels that the longer it stays above, and chops around, the better that it'll be. So we're still kind of holding off on this. And then in our currencies, they're pretty much all in between areas of good demand and good supply, good support, good resistance, because we have, I think, just a lot of things that are waiting on the breakout one way or the other from the FOMC announcement. We are seeing that we're getting a little rollover. I mean, the Aussie and the Canadian dollar almost look identical to one another, not as affected with what's happening in the Brexit as the euro and the pound. Now, the pound is sitting above a potential breakdown point. I thought last night, we may break down below this line, but we didn't. And that's really why we set the trade up, so that we only get short if it had the breakdown below. Now, it very well could continue to run up. And if it does run up, we've got a couple of different areas up in here to look at as opportunities. Probably the best is this area way up here for a potential reversal point. Nothing really to add in the Japanese yen. Keep an eye on the Japanese yen, as we do have a pretty big announcement coming out today. So overall, I think it's a great day to practice following your rules, as every day is, but just waiting for the trades to come to you and not forcing something if we're not getting a whole lot of movement. So sometimes we'll have these things that do occur. Now, as far as the rest of the week goes, I'm actually taking some time off with the family this week, so I don't think we're going to have a daily market commentary every day. I may still get one or two up throughout the week, but I'm spending some time with the family today, so don't expect to see one every day this week. And if I don't get another one out until next week's weekend edition, then I will see you then. And I haven't made that decision yet. But so as far as my videos, just keep an eye. I will probably get one or two of them out, but I make no promises. So, all right, everybody. Hope you have an absolutely amazing day. Thanks for joining us this morning. And if you got any questions, please feel free to send us an email, support@tradersarmy.com. I will talk to you soon.